My name is Ian Walsh. This is The Moment Money Matters, Day 2 with Kevin Gillen. Kevin, thank you so much for joining us.
Thank you for having me again.
Kevin is an extremely accomplished economist at Drexel, still with Drexel, correct?
Correct.
And we're going over some of the housing and data reports that he put out. And once I saw his reports, I said, we've got to have him on the show. This is only beneficial to all the investors that will be watching this and understanding a totally different take as to where people normally look at the market. We defined last time how he views a bubble. The next question is, okay, Kevin, well, I'm in the Eastern PA market. You know the suburbs, you know the city. What are some areas that offer some opportunity right now due to the data that you look at?
Right now, the city is the hottest market of all. You could practically just throw a dart at just a map of the city, and you'd probably do pretty well, at least in the short term. There is momentum, significant momentum right now behind house prices that I would expect to continue for at least the next 6 to 12 months. Even though I think we should see some deceleration. That being said, the absolute hottest markets in the short term are basically what I would call the outer ring of Center City. The story of Philadelphia's revitalization over the last 20, 25 years or so is really the story of Center City's revitalization and how it spilled over into the surrounding neighborhoods. So in the 90s, Center City came back, Rittenhouse Square, Washington Square. In the 2000s, that's when we saw Northern Liberties, Old City, Southwest Center City Graduate Hospital, Queen Village, the Art Museum, Fairmount area. The next ring of neighborhoods really popped back. And now in this current upcycle, it's the next ring of zip codes around those. So, it's your Fishtown, not Kensington, your Brewerytown, Francisville, Mantua, Point Breeze, Pensport. So basically, if you want to know where the housing market is heading, the metaphor I like to use, it's kind of like surfing. You want to catch a wave and ride it. Well, if you look at a map of Philadelphia, imagine that a puddle of water shaped like Philadelphia. And you drop a stone right into the center of Center City, right where City Hall is. As those ripples go out, that's the wave you want to catch. And right now, that wave is roughly about, I'd say, 3 to 4 miles outside of Center City. So that's the wave you want to catch. If you're doing, a short-term investment, that is buying, fixing, flipping, over say, the next 12-month horizon. That's the good news for the city. Longer term, I think that's just going to continue. So, longer term, I'd be looking at lower northeast Philadelphia, Germantown, places like that. Now, outside of the city, it's much different. In general, what's really been remarkable about this current upcycle is that for the first time in decades, the city's revitalization is outpacing the suburbs. Right now, house prices in the city are not only above their previous pre-recession peak. In other words, we've erased all the losses in housing wealth that happened during the recession. But the price level in Philadelphia is actually roughly about 10 to 15% higher than its previous peak. The suburbs, by contrast, on average, are still well below their pre-recession peak. There's still many, many homeowners in negative equity. The area of the suburbs in this region that I'm most bearish on is South Jersey. Not only is the economic growth there just enormously low, they've got a graying population, they've got the huge millstone of high property taxes around their neck. And then last but not least is their foreclosure rate. New Jersey ranks #1 in the country for the longest foreclosure process, okay? The average foreclosure process in New Jersey is 3 to 5 years. So they're still working off that backlog of foreclosure inventory that happened during the recession. By contrast, you want to guess what state in the union has the shortest foreclosure process?
Let's go with PA.
Texas.
Texas, okay.
Average foreclosure process in Texas is 3 months, okay?
Yeah.
And then you're out on the street. They don't play around there. Now, I get that there's sympathy for homeowners, who are underwater or got unemployed during the recession, but the problem with lengthening that foreclosure process is that it just delays your recovery. Because all those foreclosed properties are boarded up, they're depressing surrounding property values, it's an abundance of supply in the pipeline that is depressing prices, and until that gets worked off, I don't see South Jersey coming back. And even then, South Jersey's long-term fundamentals are not that great either. So that's the one market I would avoid. In between are the Pennsylvania and northern Delaware suburban markets. There are some hot spots that we are seeing, particularly the middle to upper income communities. Around King of Prussia, is certainly on fire. But in general, the very far-flung outer ring suburbs are the ones that, with long commute times, are the ones that are experiencing the slowest recovery. And that's where I would characterize the sort of geographic variation in market trends in this region right now.
Perfect. That is some good information. I like the ripple. Drop the stone, put the ripple, and I see it. I mean, I see the business I'm in every day. And I wouldn't have called that analogy, but I see the exact analogy that you're saying. Those areas that you say right now are in transition. 10 years from now, those guys look like cowboys that, were geniuses back in the day, but you're just saying it's just a ripple effect and work from Center City outwards. And, as much as we all like to believe we're geniuses, you're saying it's just how it is. So stand in one of those zip codes and there's some opportunity. So Kevin, I appreciate it. If you guys go to Lindy Housing Report on Google, you'll see it on Drexel's site. You can download any one of Kevin's reports, as well as kevin.c.gillen@drexel.edu for his contact. And I'm Ian at hardmoneybankers.com.